Kevin wanted us to look at Mr. Price. We know the results, 7% of their shops were looted and in the riots. But more importantly, let's see what the investors think about it. The first idea is that, the sell-off might be massive, maybe back into a correction territory or even lower back into bear market. But let's just see what has happened the last couple of days and since, let's just interpret the graph. Because sometimes it's much better to just look at the graph and interpret what the informed capital think than rather to project our own ideas of what should happen. Remember, the market is always right. And if you're on the wrong side, you're the wrong one. The market always tells you what the informed capital thinks. Whether you agree with that or not, the market and the share price and where it's trading, that is always right. Yes, it overreacts and yes, it always moves into balance. But what I'm trying to say is don't always project your own ideas and feelings of what should happen because of circumstances onto the share price, because the graph will tell you what investors think. And maybe our opinions is just too small to make the share price move. But let's have a look from a technical perspective what happened on Mr. Price. First thing, it was overbought. So we know the probability for the instrument to retrace is there. More importantly, there was a tweezer top there. 2 consecutive candles that found resistance at almost the same level, waiting there around 238 Rand 47. Could not change into a support, and a tweezer top. I think I said tweezer at the bottom. It's a tweezer top. A tweezer top is after a rally when 2 consecutive candles right next to one another have found resistance at almost the same level, and that when one of those lows, sometimes they use the shadows or the real bodies, doesn't matter, depends how strong the trend line is. You can go back to the history and see how many touching points you can get. Once that low or that real body or that shadow starts to change into a resistance, the tweezer top is confirmed, which tells you the bell is ringing, that we can see maybe more profit taking. And on Mr. Price, that was below 227 Rand 61. An ideal place also to short the share, should you want to, with a tweezer top or a triple top or a double top, especially when it's nicely overbought and that blue line, that K line starts to break downwards through the orange line that confirms the negative divergence. But more importantly, let's see what is happening this week. And remember, these are weekly graphs, and this candle is not finished yet. It's still in the making. So that candle will only be finished by Friday's close, and then we can say whether it was a positive or a negative candle. But more importantly, I want to show and highlight this lowest shadow on the candle, which tells us that the low of this week on all the news was 195 Rand. And in the dip, despite everything, there were buyers that started to buy the share to higher levels. My 40-week moving average is still a support, so that is positive. So now the big question is, will last week's high, waiting at 216 Rand and 13 cent, start to change into a support? Because if it does, that means we can maybe see a turnaround here. And then what will happen is, if we go back, it might be part of a massive inverse head and shoulder for Mr. Price. Remember, it's a massive inverse head and shoulder, because I'm going back to January 2019. And it's not proven, but there is a theory in technical analysis that the time it has taken for the formation to develop, it can easily take that long time to play out completely. So let's see if this is a possible right shoulder for Mr. Price, or is it the instrument going to go, or Mr. Price going to continue to reach for lower levels? My stochastic is in no man's land. It's sitting on a 49, not an ideal place to enter or exit. We want to buy when it's oversold and sell when it's overbought. So at this stage, I hope that helps you, Kevin, to make a decision on Mr. Price and to keep that support of 195, maybe as your line in the sand. If you, depending where you bought and you want to make it a little bit bigger, maybe the 40-week moving average, waiting at 182 Rand 35. Himpo wanted us to look at Truworths. Interesting enough, also an inverse head and shoulder formation. And what is an inverse head and shoulder formation? It is a positive formation that tells me as long as the neckline of the formation remains a support, we can see higher levels. And let's see, maybe we can get a better right shoulder here. No, also not. Let's go back. It can't be, remember, it can't be too skew as well. So otherwise, you know, it needs to be a decent left shoulder and a head. I'm just counting the touching points there. Great. So, and this one needs to come back a little bit. It needs to touch either the wicks or the real bodies of the candle needs to touch the trend line. I mean, you need to have shoulders to have a head and a shoulder. So it needs to touch it. So I've got a left shoulder, head, and a right shoulder. My neckline weighted there around 51 Rand 62. It has changed now into a support, which means my head and shoulder formation is in play. Has my conservative target been reached? I can take the length of the right shoulder, project it upwards, and I can see, yes, it has been reached already. So what is the full target of the inverse head and shoulder formation on Truworths? It's the length of the head, projected upwards from where the formation was confirmed on the neckline, meaning 82, 85 is a possible target for Truworths. When will the optimism around this formation be obsolete? Obviously below either the right or the left shoulder, below those levels, and they are waiting at 45.37. Below those levels, the optimism around this formation will be off the table. My 40-week moving average is still beautifully a support, so now it's a question of how high can it go. Yes, when a share is this overbought and it looks like the blue line is losing steam, we can easily see a retracement. But at this stage, there's no warning yet. This inverse head and shoulder formation is rather telling me that this Truworths graph wants to go higher. Ishmael wanted us to look at Cashbuild. Ticker on our exchange, CSB. One of the great things I love about this graph, Ishmael, is the fact that for the last couple of weeks, Cashbuild has kept that 40-week moving average a support. And that is seen as positive. It means even in the fight, they are holding, the buyers are protecting that support, and that they are the strongest. My stochastic is not completely oversold. I mean, it's not below a 20. But what is positive about my stochastic is the fact that that blue line has broken upwards through the orange line and has remained above it, and it's still pointing upwards, and that is seen as a positive. Yes, my 40-week moving average is a support that is running at 273 Rand 17. Below that level, the long-term sentiment towards the instrument will change to negative, and it will be seen as negative. It will be a warning for Cashbuild. My neckline of this inverse head and shoulder formation is waiting at 326 Rand 30. Above that level, the optimism around that formation will be confirmed. But you can see here, even if you go back to the history, quite a strong resistance that has to change into a support for Cashbuild. The optimism around this formation will become obsolete once the left shoulder or the right shoulder starts to change into a resistance. And the lowest one of the two is waiting at 231 Rand. Below that level, the optimism around this inverse head and shoulder formation will be obsolete, and we can say, hey, this is negative. There is also a possible small head and shoulder formation here, Ishmael. I've got a left shoulder, a head, and a possible right shoulder. So let's hope that they keep on supporting that 40-week moving average, and that the buyers would make use of this oversold territory to buy the share and protect the share price to higher levels. Robin wanted us to look at Sibanye. One of the favorites in our market have been for a while, and obviously the expectation that the rand is going to weaken. We can see a lot of the investors, went back to the gold shares, etc., and as well as the platinum ones. So I want to go back and highlight again. Previously, we have spoken about the head and shoulder formation on Sibanye. So first important thing to notice is the fact that we are fighting that 40-week moving average. Since that week of the 14th of June, this Sibanye has been fighting that 40-week, and it looks like it is struggling to keep it a support. So that's the first warning bell that is ringing to say the instrument needs to change 61 Rand 69 into a support in order to sustain the momentum to the top. I've got a left shoulder, a head, and a possible right shoulder here. So my neckline of this possible head and shoulder formation on Sibanye, excuse me, is waiting below at 57 Rand 66. Below 57.66, the negativity around this formation will be confirmed. Now, always the big question is, Chriselle, how low can it go? So I take the length of the head, project it downwards from the neckline where it will be confirmed, meaning Sibanye can go back to around 38 Rand 42 should that full head and shoulder formation play out. When Sibanye starts to trade above 65 Rand 79 again, the warning of that head and shoulder will become completely obsolete and we can see lower levels. So let's see, let's hope they can get above that 65.79 level, because then that head and shoulder formation will be off the table and we can assume higher levels for Sibanye. Roger wanted us to look at Santam. Ticker on our exchange, CTN. Oh, no, I think they've changed it actually. Let me just see. Oh, CNT. So let's have a look and see, Roger, what Sanlam has done and what the graph looks like. One, just look at that stochastic. It's oversold, but my lines are still pointing downwards. My blue line as well as my orange line are still pointing downwards, which tells me the momentum to the bottom is clearly in place. My 40-week moving average waiting at 255.71 has changed into a resistance, which means my warning for long-term investors is on the table. So now, the question is always, where can I buy? Where can I buy? The problem is, let's have a look here. Santam has been making recent new lows since the week of the 31st of May. So we need to wait for the share to stop making new lows, find a consolidation base, find support. Let's see where the buyers start protecting the share. And once that takes place, and I have a turnaround candle or optimism with higher lows or a dragonfly candle, that's when we start to nibble. At the moment, the momentum to the bottom is in place. Roger, if you've got the share and you want to maybe take a loss or sell it, this is actually the worst place to do it. We don't want to sell a share when it's oversold. We want to sell it when it's overbought. So if it's this oversold, it's actually the worst place to sell it. So wait patiently for the instrument. Maybe if you are far enough from your average price, you would be able to add to the position to better it, to get onto break even and maybe into a profit. Don't forget to send through your request for next week's show. Have a fantastic week. Take care.